The Pentium processor with Intel MMX technology gives you full sound, smooth video, and rich colors. So it's no wonder the technicians who add this technology walk with a little extra spring in their step.
It is not an overstatement to say that semiconductors power the modern world. They are part of virtually every single product that we use, and they also form a key component of the factories that actually manufacture the products that we buy and use on a day-to-day basis. In this video, I'm going to be talking about one of the largest semiconductor producers in the world, which is Intel Corporation. And I'm going to be doing a detailed stock analysis and sharing my investment thesis on why I think Intel is worth buying. And I'll also be doing a deep dive into their financials and providing you with a fair value based on my own calculations of Intel as a stock.
Well, you can tell by the way I use my walk, I'm a woman's man, no time to talk. Stay alive, stay alive.
Hello and welcome to The Nimble Nomad. My name is Arjun and this is the channel where we talk about money and investing. In case you're new here, please consider subscribing to my channel as I make new content about investing and new stocks to consider investing in every single week. So in this video, we're going to be talking about semiconductors, which are a key component of virtually every single product that we use. As I said earlier in the video, they power our cars, our cell phones, our washing machines, and even our refrigerators. Now, if you're familiar with some of the news that has been happening around semiconductors and the semiconductor industry over the past year, well, we've basically been in a massive shortage of semiconductors over the past year. It's actually gotten so bad that GM or General Motors actually announced that they could lose up to $2 billion this year because they had to cut production and they couldn't manufacture enough cars. Even Toyota, which is one of the largest car manufacturers by volume, said that they had to cut manufacturing at some of their Southeast Asia plants because of shortages in semiconductors. Not only that, President Biden has actually initiated or signed an executive order to perform a review of the US industry's reliance on semiconductors and the supply chain of semiconductors to see if the US had become over-reliant on Asia in manufacturing their semiconductors. Now, all of this is the backdrop and some of the news that's happening about semiconductors as an industry, but that doesn't mean that we go and invest in any company that is out there which is manufacturing chips and semiconductors. So let's dive a little bit deeper into why we think Intel is worth buying on the basis of this as a backdrop. Now, before we actually dive deep into the stock analysis of Intel as a company, let's actually look at what Intel does as a business. So what is their main driver of revenue? So in case you've never heard of Intel, Intel is one of the largest producers of semiconductors and chips in the world. And they're based out of the US. Now, they are also the original pioneers of semiconductors and were one of the first companies to ever produce semiconductors in the world. So they produce semiconductors for not only personal use, which go into personal products like laptops and cell phones, but they also produce chips which are used at an enterprise and government level. So at a more sophisticated level to enhance cloud computing and things like that. So the two main drivers for their business, which accounts for about 90% of the revenue which Intel makes, is through their data center group or the DCG business. And the other bit is the CCG business, which is the personal use or personal computing business. So this accounts for about 90% of all business or revenue that Intel makes. Now, they also have smaller segments which contribute a little bit into their revenue stream. So they have a IoTG business, which is basically Internet of Things. So this is some of the more embedded devices and a little bit more niche. And then they have this entity or this company that they bought in 2011, I believe, which is called Mobileye. I'll come back to this in a little bit later, but basically Mobileye produces autonomous driving solutions and some of the auto industry technology and chips. So that's basically what Intel does. Now let's look at what are the competitive advantages for a company like Intel. So one of the biggest competitive advantages for Intel as a company is that Intel is the only US-based company which not only designs their chips in-house, but they also manufacture their chips in-house. So they have a significant proportion of their business which has a fab or the fab capabilities where they can manufacture the chips. Now, this is quite different to some of their peers and rivals such as AMD, Nvidia, Apple, Google, so on and so forth, where those guys actually design their own chips, but they do not manufacture them in-house. They actually have to outsource them to companies like TSMC and Samsung. Now, this actually is a massive advantage, and their new CEO is actually looking at enhancing this advantage by investing heavily in this specific capability. So Pat Gelsinger, who is their new CEO, has actually been investing a lot of money in building these plants, which actually costs a lot of money. To enhance their capability and capacity, so that not only are they now able to manufacture their own chips, but they can in future take on the responsibility of manufacturing chips for some of their competitors like Nvidia and AMD as well. So I think in terms of competitive advantages and growth factors, this is definitely a massive advantage because they're building these sites for manufacturing in the US and in Europe, and this is quite relevant in the context of what's happening in the US, where the government is actually looking at whether they're over-reliant on Taiwan and more specifically China for manufacturing of their chips.
I think I have more concrete trucks working for me today than any other human on the planet. Right? We have construction in Oregon, New Mexico, Arizona, Ireland, and Israel, and we expect to plant our next major fabs in US and Europe before the end of this year.
Now, the other competitive advantage that Intel has is that the supply chain globally for semiconductors and chips has been disrupted significantly due to COVID. And this has particularly impacted the auto industry. Now, the reason for this is if you look at most modern cars, the central dash, where you used to have all these knobs for controlling the volume and aircon and stuff like that, has now effectively been replaced with this massive screen, which basically has all these logos and basically digitized version of those knobs which we used to have. Now, all of that actually is centrally powered by semiconductors. And basically, Intel has said that in 6 to 9 months, so basically in 2022, they're going to set aside a significant proportion of their manufacturing capability in Ireland to specifically focus on supplying the auto industry. And the auto industry is one of the only industries or one of the main industries which has been impacted by the supply chain issues on the semiconductor. So all of this added, I think, gives Intel a significant edge over some of its peers in terms of competitive advantages. Now let's look at some of the key risks that Intel is actually facing. So Intel stock actually has been really volatile over the last year or so. So if you go look at the stock price over the last year, there's been a couple of drops, significant drops. And the main reasons for these are primarily two. One, they actually missed an entire cycle of being able to produce and compete on some of the high-powered, sophisticated chips. So they had this 7-nanometer chip, which they were supposed to produce. So basically, these chips come in different sizes. They were intending to produce a 7-nanometer chip, which they missed or they had to delay because of some issues in their manufacturing capability. And then the second thing was that Intel actually revised its guidance and more specifically said that their profit margins were reducing, whereas some of their competitors had profit margins increase and their volume of sales increase. So this actually meant that Intel has actually taken a nosedive from a stock price perspective. Now, in my honest opinion, I think some of the market reaction to Intel as a company has been just far too extreme, I think, honestly. And I do not think that these issues are unsurmountable. So there have been some positive decisions that the company has made. So one of them being that, as I said earlier, they replaced their CEO with Pat Gelsinger, who actually started his career at Intel and was in that company for 30 years before he left to become a CEO elsewhere. And now he's come back to lead the company. So he's a technologist, understands the business quite well, and he's really passionate guy who's intending to make sure Intel not only develops its manufacturing capability and fixes the issues that it had previously, but also he's looking to make sure that the focus on technology and Intel becoming a market leader in producing leading and high-powered chips comes back. So I honestly think that these risks will get surmounted. It's just a matter of time. Now let's look at the financials of Intel as a company. And what I'll do is I'll walk through some of these facts and numbers, comparing it to AMD, which is a direct competitor of Intel. So Intel is currently trading at a PE ratio of 9.85, and it has a earnings per share multiple of just 5.4. But if you compare this with AMD, which has a PE ratio or price to earnings multiple of 42 and an earnings per share of just 3.4. So basically, Intel is trading at 1/4 the price multiple of AMD, yet it has a higher earnings compared to AMD. Now, to add to all of this, Intel actually offers you a dividend, which is about 2.73%, whereas AMD offers you nothing for holding that stock. So they don't offer you any dividends. Now, if you compare this from a pure revenue and free cash flow perspective as well, so in 2017, Intel's revenue was about $62.7 billion. And since then, its revenue over the last 12 months has increased to about $78 billion. Now, the free cash flow during the same period has gone from $10 billion to almost $17 billion during the same period. Now, if you compare this with AMD, and I'm only going to talk about last year's numbers because the numbers before that were absolute crap. So AMD's revenue for last year, or the financial year 2020, was just $14.8 billion. And their free cash flow during the same period was $777 million. So basically, Intel's free cash flow is almost equal to the entire revenue that AMD made during the same period. It's quite surprising, isn't it? Now, I've done a discounted cash flow for Intel, and basically my assessment of Intel's earnings based on some of the analyst estimates which were available to me gave me a fair value of about $74 per share before net debt was accounted for, and after debt was accounted for, it was about $63. And so in effect, Intel is definitely trading currently below its fair value, and it's currently trading at about $50 per share. So in my opinion, it's definitely worth buying based on the financials and some of the context and the competitive advantages that Intel has. The backdrop to some of this is, and this goes back to my conversation about Mobileye, Intel recently announced that they were going to spin off their Mobileye business, so that business which is responsible for autonomous technology or the autonomous driving technology, and spin that off into a separate company. And Intel has estimated that the net value of that new company that they will spin off for Mobileye is going to be worth about $50 billion. So their plan basically at this point, and they haven't finalized the detail yet, but is to continue to hold majority stake in the new company that Mobileye becomes. And what they'll do is they'll issue new shares and make Mobileye a publicly traded company. So this is going to be done as an IPO. So what that essentially means is Intel is going to get about $25 billion in cash if the fair value or the market value ends up being $50 billion. And I honestly think this couldn't have come at a better time, especially when they're continuing to invest so heavily in building capacity in terms of their manufacturing capability for new chips and plants across the globe. I honestly don't think they need the money based on their revenue and free cash flow, but it couldn't come at a better time. So in my opinion, I think honestly, Intel is definitely worth buying. And I think the investment thesis for me is pretty clear at this point in time. It's a very solid company from a financials perspective. I honestly think that the market has overreacted to some of the negativity and the hype associated with their peers and competitors. And I honestly think, the stock price could get a lot higher than $75 per share. If you look at some of the multiples of these other semiconductor companies from a few years ago, and to where they are now, I think the same thing could happen, and there could be a turnaround story with Intel as the new CEO strategy comes into play. I hope you enjoyed this video, and if you did, and if this video did help you out, please don't forget to like and subscribe to the channel, and I'll see you in the next video. Goodbye.